and welcome to my channel. For those of you new, my name's Dave, I work in financial services, and these videos are a mixture and journey towards my development towards financial freedom. They will cover financial products and they will also cover financial well-being so you, like me, can reach your financial goals and aims sometime in the future. So let's get into this latest video. This video is about my self-invested personal pension plan for the review for the month of July 2022. Now, I do have a workplace pension, but I'm limited on the funds and the amount of money I can put in, so I do my own self-invested personal pension plan so I can control the contributions, and I can also control where my investments are made. The aim of the plan is an annual return of 10% each year. For 2022, we're looking for annual dividends of £4,000, and we're looking for a year-end valuation of £120,000. Somewhat struggled this year. If you look at the following chart, it's no surprise based on what's happened about global events. The Russia-Ukraine conflict, America's had some kind of tech sell-off, big companies, S&P, Nasdaq's down over 20% the year to date. But if you look at the following chart, during the start of the month, we were £88,885. Year-to-date return, minus 13.98%, so not great. In the month, though, we've had a very good recovery. Portfolio is now worth £94,649. A loss for the year-to-date of minus 3.24%. But the portfolio has increased in value by £5,764. Hopefully moving forwards, the market sense will return, some recovery will come on, and we may well get towards our target of 10%. But it just goes to show, look at the following chart, how erratic certain months can be. During the month we made normal contributions of £200, of which the government topped up with 25%, so £50 tax relief. Our provider incurred monthly fees of £13.43. If we look at the following chart, a quick overview of where we're invested. Predominantly UK based. 86.02% is in the UK and Europe. 11.93% is in the USA and Americas. And 2.05% is in Asia and emerging markets. We got some good dividends in the month from AJ Bell, our platform provider, gave us £7.25. Sainsbury's, the retailer, gave a nice dividend of £111.27, which we reinvested and it gave us 50 new shares. So during the month, total dividends of £118.52. Year-to-date dividends of £2,038.90, so on target. And across our shares, we've got a current yield of 3.75% within our portfolio. Just going to run through our holdings within the portfolio. So I'll do our shares first and then I'll break it down to our funds separate. We have 16 shares in the portfolio, 7 in profit, 9 in loss. Total share values of £76,630, which makes up 80.97%, of which 65% is in the FTSE 100 and 16% is in the FTSE 250. Some good news in the portfolio to start off with. The takeover of John Menzies, the aviation provider, has been agreed. So we put £1,000 in. It will give us just over £1,500 back, a 50% profit, and that will be paid out sometime during the month of August, and it'll be reinvested into current shares we hold. So some good news within the portfolio. Look at the following chart, just a quick overview. I'm not going to go through all 16 shares, but just the main points. Our largest holding is Aviva, 4,208 shares, £16,500, 18% of our portfolio. It's safe, it's secure, it's boring, but it is very cash rich, and it hopefully will give very good results next month at the start of August, and hopefully give us a very good dividend. It's currently giving a yield of about 5 to 6%. Next largest holding is Lloyds the Banking Group. We currently own 32,729 shares, £14,800, makes up nearly 16% of our portfolio. In the month, very good interim results. Margins increased, profits increased, dividends up 20% to 0.8p a share, so it will give us a very nice dividend later on this year in September, which will be reinvested. Our next shareholding is Drax, the biomass plant maker, 1,189 shares, £9,300, nearly 10% of our portfolio. It was bought as a very good cash-rich company. It has very good expansion plans in America recently, does pay a very good dividend, has been on a buying spree. Our next holding, Greggs, was struggling during this year, but it has had a very good rally during the month. 276 shares, £5,630, nearly 6% of our portfolio. Results were very good, dividend was kept the same, but it is under cost inflation measures, so profits have not been great during the interim results. But it is expanding, it's very cash rich, but unfortunately increased wages, increased costs have hampered the business moving in its current position. Our next holding is HSBC Global Bank, 1,059 shares, £5,500, 5.8% of our portfolio. Again, very good results, a global player, very good interim results, good dividends, and it's reinstated quarterly dividends moving forwards. So it will give us some cash flow in the coming quarters. Next holding is Barclays Bank, 2,904 shares, £4,500, nearly 5% of our portfolio. Again, very good dividend, 2.25p as an interim. Profit margins up, profits up, good return on capital, very cash rich, and it has done a share buyback of £500 million this year to date, and it has introduced another share back moving forwards over the coming months, which it has already started to implement. Our next holding is one we've increased over the past few months, Legal & General, 1,364 shares, £3,500, nearly 4% of our portfolio, and we did buy another 139 shares during the month, a cost of £363, but it is giving a very good yield of between 7 and 8%, and it hopefully will give very good results during the month of August, and it will give a very nice dividend payable out at the end of September. And our final share with results this month was Shell. We own 150 shares, £3,200, 3.5% of our portfolio, but very cash rich. Dividends increased, profits increased year on year. Not some great sentiment because of obviously the fuel characteristics, the costs, but Shell BP, which you hold in a portfolio, has been on a rally lately thanks to the very good oil price. Other shares we own is JD, we own Sainsbury's, we own AG Bar, we own Card Factory. So quite a mixture of shares, say 16 shares. Has made a very good recovery the month, but more importantly, it has given us very good results and very good dividends, which will meet our targets for the annual year. So come September, October, a lot of them dividends will be reinvested, and hopefully our portfolio will show some real growth in values. Moving on to the funds in our portfolio. At the moment we own 6 funds, 3 in profit, 3 in loss, £18,015, makes up 19.03% of our portfolio. A quick overview of the funds. Our largest fund is a Legal & General Technology Fund, £5,500, 5.8%, has struggled this year, but in the month it recovered. It is up £400 during the month. Our next holding has also struggled. It's a US smaller companies, £3,725, nearly 4% of our portfolio, but again during the month a very good recovery. In the US it's made a profit of £300, but it was done by diversification away from the global tech stocks within the portfolio. Our next holding is quite selective, barely gives a positive change. Owns about 30 to 35 companies, all good quality companies, £3,200, 3.4% of our portfolio, and again in the month it was increased by £200. Our next holding is somewhat UK based. It's a UK equity fund, £2,500, makes up nearly 3% of our portfolio, and again during the month very good recovery of £200 profit. Our next holding is a global growth fund, £2,200, 2.3% of our portfolio, and a small profit of £150 in the month. So a nice pattern amongst our funds. Only one fund that has struggled really is a UK smaller companies. We put £1,000 in. It's now worth £770. Sentiment's not that great towards smaller companies, but ultimately a very good long-term player. And normally smaller companies outperform larger companies. Thankfully, it makes up 0.8% of our portfolio. So quite a mixture of shares, say 90% of our portfolio, but all bought for long-term holds, long-term diversification away from our portfolio, which was solely 100% in UK originally. So it was bought for diversification and to spread amongst different, shall we say, sectors or asset classes. So a quick recap, some very good results during the month. So we were showing a very large loss, it has recovered, the portfolio was up over £5,000 a month. Who knows what will happen moving forward, but hopefully our aims on objectives will be met. But it is not a get-rich-quick scheme. We will have good years, we will have bad years. We will have good months, we will have bad months, as we've proved, so we say the last 2 months as a basis, but it will meet our objective targets sometime in the future. Remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again soon.